less daunting and it starts to feel like, okay, I can do this. I can manage this. I can make this happen. So, some of the basic components of purchasing a home is what we're doing right now, going over a plan, figuring out your credit worthiness to get a home, the financial aspect of preparing you to get a home. And then you have the pre approval process. Once you feel like you're ready, your credit score is where it should be, you have some money saved for down payment and closing costs, and you have been on your employment for 2 years. If you are an entrepreneur, you have your tax statements and your income looks in order. That's the pre-approval process. And then the house hunting comes in with a realtor like myself, and we have a plan for what we're going to do. You house hunt, you find the one, you put an offer in, the due diligence period comes after that. And that is home inspection, making sure that your loan is airtight. After that, you have the appraisal process, which is a part of the loan process. And then you have the closing. So within those, all of those steps, is still a lot of steps in there, but that's generally it. Like literally, that is it. It's not that hard. Once you know what you're going into, it's not that hard. So starting from the beginning, who here, I'll ask this question. What are some of your issues as to why you feel like you are not ready or have not been ready in the past? Is it credit? Is it employment? Somebody chime in.
Yeah, that's one of my main issue is I'm an entrepreneur, so my money is unpredictable. So that's the main reason why I haven't been jumping specifically at getting a house in a specific time. But I'm always open to learning more information on attain because it's gonna eventually happen.
Right. There you go. I like that, Garen. You're saying, look, it's going to eventually happen. So you are an entrepreneur. How long have you had your business?
It's been since 2018.
Okay. Okay. And you have stable tax returns to show?
Yeah.
So what okay, so you should be good to go. What's going on?
So the main thing is like just income in general, just having enough income to be able to maintain and just the mortgage alone.
I
That's
see.
all.
Them just calling.
Okay. I see what you mean there. Just the income is not there
Yeah.
to get the kind of house that you're looking to get. Somebody
Yeah.
else tell me what some other issues that you have had or feel like you've had in trying to get a home or just not even taking the dive in because of preconceived notion. Tell me that too. Anybody can chime in.
I see someone written
Nobody?
someone written in the
Go ahead.
chat. It said debt to income ratio.
Okay.
That could be one.
That could be one. And that's why meeting with a realtor, I'll say this real quick. A lot of the issues that you have, I'll say 98% of them can be, really all of them can be solved. Some of them might take longer than others. I have somebody who has the employment, she has the income. It's just her credit has been so damaged from various things that she would have to wait about 2 years. She would have to do some steps in between that, but she would just have to wait a year or two. So I'm not saying that she's never going to be able to get a home, but it's all attainable. You just have to talk to someone and figure out what you need to do. So the debt to income ratio can definitely be worked out. You talk to me or you talk to a lender, or I can put you through to various lenders. I have one preferred lender. He's always on my channel, Anthony DeSano with Embrace Home Loans. He's amazing with credit. Anybody facing credit issues, he is the one for you. Really, any roadmap you need to owning, he can generally do that for you. Are you hearing am I hearing feedback? Is that just me?
Yeah, there you go. He was able to mute. There you go. You're good to go.
Okay, good, good. Okay. So yeah, he can generally help, but the debt to income ratio is it can be worked out. Whatever bills that you have, you can have a lender look at that and say, which bill do I need to get rid of? Which debt do I need to eliminate or consolidate or settle or lower the payment? Whatever you need to do, it can be done. Because in a lot of cases, some of these loan products are very easy to get. For instance, FHA, 3 to 3.5% down, as low as a 580 credit score, around 5% that you would need to bring to the closing table. But one thing I want to say about that too, with FHA, even if you don't want to get a new build, because y'all, I know y'all, if y'all watch my videos, I mainly cover new builds and they're giving away a lot of incentives like closing costs. you can still get those closing costs from an existing home, a resale home from the seller. With FHA, the seller can give you up to 6% of the purchase price, which is a lot. On a $300,000 home, that's about $18,000. That's a lot of money that can help you. Now, I've never written for that. I've never written a contract with that much in it. But yeah, my lender tells me I get a lot. So don't just think, well, I have to go new. You can still get a resale home and get a really pretty penny from the seller that'll help you moving forward. So that's something to keep in mind. If you need to talk to a lender, do that to see how you can get your debt to income down, Celia. And then I see here, Jasleen said that you want to leave a family home for your children. Yes, that's a good one. And that brings me to something else. And now, since Mike is up here, I really can talk about that. Purchasing a home and then getting term life insurance or the mortgage insurance that you can get, the mortgage life insurance to pay off that loan in case something happens to you. So at least you can know for sure, hey, even if I'm not here to pay 30 years, they're going to take over. I paid enough to get that insurance product that'll cover that so my child can have a free and clear house. What difference would it have made for you if somebody, your parent or grandparent, whoever, had left you a $300,000 home free and clear? What difference would that have made in your life that you can give to somebody else? That feeling that you'll be able to give to somebody else is amazing. It's amazing. Celia said, listen. Look, me too, still listen. $300,000 house, okay? But you can still create the same thing for your family. Don't worry about the past. Let's worry about the future. Because I'm gonna be honest with y'all, from what I can see, it's looking like it's going to get more and more unaffordable for marginal groups of people, which you already know who they are. So if you can afford it now, if you can come up with a roadmap now, I highly suggest doing it. And I'm not just saying it because I'm an agent. People who work with me know if it don't make sense, I don't even, because I want you to be happy after the closing. You have to make that payment every month, not me. I make my own payment. I don't, y'all have to make your own payment. So this is going to be your purchase, your home totally. So I would want it to work for you. But yeah, it's going to get more and more unaffordable because yes, let's just say, oh, everybody who's waiting for the rate to drop. And let's just say it does drop. Let's say it goes down to 5%. People, there are millions, millions, upwards of around 5 million people that will enter the market who are just sitting back waiting, and it's going to create more competition. Now, for a first time home buyer who may not have all the funds to compete with a $60,000 appraisal gap, like we talked about in the beginning, you might not have those funds to compete. So, how will you compete versus a low competitive market, kind of like right now, while the rates are where they're at, can leave you the opportunity to refinance if and when they do. But you can bank on my home should still increase in value no matter what. Typically, that is how it works, depending on the market. But that's why you have to talk to an agent so that you can really have a good roadmap and plan. Does anybody have any questions so far? Let me check the chat. You be in the Bahamas still? Yes, ma'am. You and me both. We would definitely be in the Bahamas. I love me some Bahamas. You cannot beat it. But yeah, that's basically it in terms of that. Just looking at FHA, looking at some of the pitfalls that you might be feeling like you can fall into, but it's always attainable for you. Do you service the Mississippi? I do not service the Mississippi area, but I can definitely get you someone who does. I'm with EXP Brokerage. There are about 80,000 agents, so trust me, I can find you somebody good down there. What's the ideal time frame for a good plan? That's really going to depend on you. That's really going to depend on you and your situation. In terms of you, Garen, I hope I'm saying your name right. But in terms of your situation, in terms of needing more income, that can definitely, it really just depends on you, how you structure your business to gain more business, how you plan to expand, coming up with a business plan, possibly getting some funding to help you expand. I don't know what your business is, but funding to help you expand and grow your business so you can have more income coming in And then you never know. Since you've had your business since 2018, it might only take this year to show the income that you're looking to show for next year. You file those returns the beginning of next year, February, you might be ready in February or March. So it just depends. And also don't sleep on the fact that you can also have a co-borrower. I know for some it's like, oh, I don't want nobody else up there. But if you want to get in, a co-borrower is not it's not a bad idea. It's really not. Consider it. Let me go back here and look again. I'm saying right, Garen. Okay, thank you. So yeah, that's just a little mini plan that you can have. Say, hey, in 6 months, I want to um, obtain some business funding and expand my business, and I'm projecting to make an extra. I don't know. I'm just gonna throw a number, $30,000 for the year. That could put you where you need to be. Definitely put you where you need to be. So yeah, moving forward from there, just a couple of different plans. I'm gonna say really quick. I don't want to get too deep. I know it's late. I know everybody got to make dinner, get the kids to bed. But I'll just say I don't want to, like I said, I don't want to get too deep. But looking at the different plans, one plan someone might have is to use FHA to purchase their first home, live in it for 3 years, and then you can rent that property out and get another FHA loan to get another home. And like I said, FHA is good because you only have to have 3 to 3.5% for that down payment, not including closing costs. But it's attractive because for some conventional loans, investors or someone getting a second home or another investment property would need much more down, upwards of 10 and 20%. So that 3 and 3.5% is really a sweet deal that you can use to kind of house hack, as they say, and you can buy another home in 3 years because you're still considered a first time home buyer after 3 years, and you can use FHA again. So that's something to keep in mind. Also, with FHA, you can get up to a 4 unit property as long as you live in one. So if you got a quad, you live in one, you are getting three incomes from the folks around you, right? So it's different ways to do it, and I throw that out there because the possibilities are truly amazing. Oh, my books. Possibility is truly amazing to use FHA and use home buying as a tool to invest and make more money. Is there a major difference between getting a single family or a multi-family home? That's something that we would talk to a lender about. It really just depends on the situation. But if you want to talk with me and my lender, we definitely can discuss that, go over the areas and all of that. Let me see if I missed any other questions. Mike, do you have anything to add?
That was just amazing. The questions I have written down, just in case someone was shy to answer questions, they already asked the questions. So that was
They
just great.
did.
That's great. I hope you all enjoyed that wonderful information. Wonderful information, and thank you all for being responsive and asking questions. But do you have anything else you want to? Okay, what's that? Can you drop your contact?
Yes, I sure will, Celia. And anybody, um, Mike, if you wouldn't mind sharing their email addresses, I can send my first time home buyer packet and just the email to y'all.
Mhm.
If you have any questions later or you want to reach out later, that is perfectly fine with me.
I'll definitely do that.
Thank you so much. I'm going to put my number here. Call me or email me. And yeah, that's it, y'all. Any last questions? If not, oh, and the YouTube, let me go get it. I'll email it to you. I'm gonna email it to you.
Okay.
Okay, I'm about to copy yours anyway. Celia, you're not playing. Are you ready to go? You seem like you ready to go. Oh, she driving. That's right. You driving.
Yeah. Mhm.
But let me tell you real quick, Mike, the what I'm doing next Tuesday is we're meeting in Newton County. Anybody who wants to attend, I can also put that link in the email too. If you want to attend that, if you feel like you're ready or feel like you're about to be ready, we're going to meet at this new build. They only have a $2,500 deposit for the homes to get into a brand new build, 3 to 5 bedroom homes in Newton County, ideal location, stores right in front of the community, and the interstate is right up the street. It's a very good location to get in. But for the entire month of April, I put a post up, Mike. My daughter is autistic. She's 9 years old. Her name is Joy. So it is Autism Awareness Acceptance Month. And I'm just really putting information out there about that, but also for first-time homebuyers. So I'm having that event next Tuesday. And then we're also having a walk in Rockdale County on that Thursday. I have not put the information out, but I should be putting it out soon. So if
Mhm.
y'all are interested in that, it'll be in the email.
That sounds great. I'll definitely be there. So definitely send it to
Thank
me.
you.
I'll come.
Newton
Thank you.
County?
What's that?
Did you say Newton County?
Yeah, Newton County, and the city is Covington, Georgia. That's where the new builds are with the $2,500 down. That's not the only one. So y'all need to follow me on Instagram because I'm gonna have deals all throughout. We're posting autism information, we're posting first time home buyer information, and we're posting these deals. I also have another deal with townhomes in Lovejoy with a $500 deposit. So now is the time. I'm telling y'all, now is the time before it is out of reach. Seriously. Oh, thank you. Thank you. Well, all right, y'all. That's it. Thank y'all for coming out. Thank you, Mike, for having me.
Thank you so much. Thank you so much. Let me change this screen over so I can close it out. End it off with some finance, of course, I want to share with you. Thank you all. I hope this information actually benefited you all. This was helpful to me. Although I own a home, I will be getting a home again shortly. So no, thank you so much for that, Faith. That was just wonderful. And thank you all for joining in. But I also want to share with you, you know, we always bring together buying, of course, your first home, but also finance, you know, like you said, getting your finance in order, preparing for, you know, your first home, but also having a plan financially. And I just want to share some quick screen with you just so, you know, I can help you guys on understanding what you have to prepare for, you know, what you have to prepare for when it comes to setting up a financial plan when purchasing your first home, or maybe a car, or maybe a vacation, whatever it may be. You want to make sure you have some type of plan in place for, you know, your finance. Like she's talked about the debt to income ratio. You have to make sure your finances in order, because that's what, you know, banks looks for. That's what lenders look for when it comes to those. So let me share the screen once this thing get out the way. Okay, let me share my screen up here. My apologies. Let me pull this up. Okay, there we go. So this is why I love working with Faith. Listen, she's the realtor. She knows everything about the homes and everything. And we come together and we bring real estate and financial education together, you know. So I'm part of a national financial literacy campaign. This is where we want to build a new financial industry where we educate families traditionally to sit down with someone to get financial education. If you haven't went to college and took like a personal finance class, traditionally, in order to work with financial advisors, you have to go to them. You have to have some type of fund, some money, $10,000, $25,000 in order to get information. But here at WSB, National Financial Literacy Campaign, we bring the information to you for free. And I have a good little gift for you near the end of this presentation, just so you can see what we have in store for you. But why do you want to talk about finance? Because of the challenges that we face. Over here to the left is your Saving Your Future book. If any of you want a physical copy or ebook version of this, I will send you an email. Just email me if you want a copy. I'll send it to you. Make sure you have this. But it's a great book to teach you about the basic principles of building a financial foundation. So you see here in this introduction section, we talk about the US. 64% of Americans are living paycheck to paycheck. You know, most people want a home, but this is the devastating statistics that ruin people for getting a home. 64% of Americans are living paycheck to paycheck. The average American's household credit card balance is about $10,000. And nearly half of Americans between the ages of 55 and 66 have absolutely no retirement savings. This is ridiculous. This is the society we're in. But this book has great principles and information that I definitely want you to have. But let's look at here, this wealth gap and the widening of the wealth gap. I remember Faith was just talking about how, you know, the gap between, you know, people that's ready to buy homes, the wealthy, and, you know, people that got the money, and the people that, you know, barely have the money, it's going to be hard for them to get a home. But let's look at this wealth gap, how this looks. Look at this purple line all the way at the bottom 50% of Americans. This is 50% of the population. As you see here, from 1991 to 2021, the rich is getting richer, but the wealth is steady, staying the same. We ain't even factoring cost of living, inflation, things like that. But this is the bottom 50% of Americans. And this tan line right here is 90% of the population. So you know what this means? This means majority own only minority of the wealth, just a little bit of it. So how do the rich continue to grow rich and the poor become even poorer? This finance is all about education. It's not all about who have the opportunity. If you have the right education, you can create an opportunity. But let's look at this. It says, can you be part of this group? If you look at here, the United States holds the most millionaires compared to other countries. We live in a land of opportunities. But the crazy thing is, the United States have the most finance problems ever. Many of the populations, but we hold the most number of millionaires. But the crazy thing, how did we get here? This is the crazy thing. I'm not going to say it's not your fault. You know, sometimes we haven't been taught, even myself, I wasn't taught how to have a budget, do a budget. When you buy a home, you ready to buy a home, make sure you have a budget. But we haven't been taught how to have a budget. We haven't been taught how to make financial goals for emergencies and retirement and long-term care or whatever that case may be. We haven't been taught that. We haven't been taught to avoid being impulsive spenders, you know, influenced by ads and social media. I know most of you all who have children here, you know, when they see something on the screen on TV, they ready to buy. I want that. You know what? Sometimes as adults, we grow up and we be the same way. I see it, I want that. So we wasn't taught how to manage these things. But I'm gonna tell you, it is your fault if you don't change. My biggest motto is, once you have to be hungry for this information to want change. You can change the generation after this. Like she said, forget about the past. Forget about parents, grandparents. That's all they knew. They did the best they can. But guess what? It starts with you. You can make this change financially. And guess what? You can get into the home you want. You can show your kids a different way. So we can build up our financial future with knowledge, obtaining knowledge, planning, consistent practices over a long period of time. You are not totally free until you are actually financially free. But change is possible. I'm a believer. I hope all of you on here are believers that change is possible. You can change your situation. It's nothing. I don't care how much debt you in. I don't care if you stay at home with your parents. It does not matter. Your situation can change. You don't have no investments. You don't have retirement savings saved up. You can change. So, but the thing is, you have to believe in financial education. There's one thing I love that me and Faith, we put out there is not just real estate, but also being financially literate. Learning how to manage your money. This is very important. You want that home, you have to learn how to manage your money. Guess what? You have to understand how money works. You have to make money work for you. Stop learning how to work for money. Most people want to work for money, but you have to learn how to have your money work for you. There's a lot of information out there. Social media, different ways to make an income, different ways to make money. But guess what? Not all money is good money. I do say that. Not all money is good money. I believe everyone on here has a specific journey for your life. You have to learn how to have your money work for you. So your future is not in the hands of your employer. Most people work a job. If the job up and leave, guess what? It's financial distress for the family. It's messed up. Your future is not in the hands of a union or the government. I know people who live solely on Social Security. That's not enough. So it's neither in the hands of the banks or your brokers. Guess what? The future is in your hands. Here at National Financial Literacy Campaign, we teach people how to become your own money manager. Manage your own money. That's That's the foundation. And we want to teach you how to build a strong financial foundation. You know, you can't build wealth until you build a solid financial foundation. Most people want to make money fast. How can I make money? How can I make money? I just need to invest. But you haven't built a solid foundation. And this is what we teach. This is a solid foundation, proper protection, debt management, emergency funds, and then investments. It's like building a house. You must build it from ground up. You know, Faith, man, and you see them build the homes. You see how they build the homes. They don't start from the roof, the plywood from the roof. No, they start from the bottom up. And that's how you got to start with the financial foundation. So proper protection, what is that? No, proper protection. You have to learn how to protect your assets, how to protect your income, how to protect your health. And as I mentioned, that's through life insurance, protecting your life, your income, your future, your family future, protecting your assets, setting up an estate plan, a will or a trust, passing on your legacy for the next generation. And also your health, you know, disability, long-term care. Many people are living longer than ever before. So you need to plan for these things. This is how we talk about proper protection. And then we talk about debt management, managing your debt, learning how to eliminate debt, how to get it out the way. That's basically it. Most people say manage debt, you know, live with debt. No, until you learn how to manage good debt, first you need to learn how to eliminate bad debt. I'm going to tell you that. So with this bad debt, we do have workshops, and I'm going to tell you, we have free workshops for you all. If you all want to learn how to manage your debt, increase your cash flow, we have free workshops that's available for you. If you're interested, I will share more information with you. But in our workshop, we show people how to reduce the amount of time they get out of debt. Some people, if you just pay the minimum payment, it may take you 30, 40 years to get out of debt. But we can show you how if you just put $100 added additionally with the snowball effect, you can reduce that 30 years to about 17 years. And if you can put more money in, you can reduce it to probably 8 years. So we can show you how to roll up your debt and get out of debt faster. And we also want to talk about emergency funds. We were just talking about real estate, homes, right? You need to set aside 3 to 6 months, sometimes 12 months, just for unexpected expenses. You know, with a home, you have expensive things that's very expensive. The roof, the hot water heater, appliances, they can go under your car. You know, you have to set aside these emergency funds just in case anything happens. So without emergency, most time, what happens? People get into more debt, added on debt. We want to avoid that by paying yourself first. Pay yourself first. Do not pay the bill first. Don't pay your cable bill before you pay you and your family first. Pay yourself first. And we also talk about investments. After you put these things in place, then you want to learn how to have your money work for you. Put your money to work for you so you can build that nest egg to prepare for your future. So let's talk about saving and compounding. This is all about investing. So let's assume someone here, let's say you make $60,000 a year and you choose to set aside $10 per month into your account. That's $500 a month. Over time, so let's say in 30 years, you invest that $500 a month, that's $6,000 a year, at an 8% return, that would give you $745,000 just by investing it in an account that compounds over time. Let's say, so $6,000 a year times 30 years, that's only $180,000 you invested. But that $180,000 grew to $745,000 at an 8% return. That's investing. Let's look at 10%. That same amount. That 180,000 can grow to 1.1 million. This is the power of compounding interest. Stop working for money. Let me work hard for money. Let me work 2-3 jobs. No, you need to learn about saving and investing and being disciplined with your finances. And we also got to understand taxes. As Faith mentioned, purchasing a home give you tax benefits, give you very good tax benefits. So, but this, what I'm talking about here is, you know, depending on where you put your money at, you have to learn how your money get taxed, because it's not all about how much money you make. It's all about how much money you get to keep. So these three buckets, tax now, these are accounts like your checkings accounts, your savings accounts, your CDs. These accounts are taxed as earned. So as you earn interest, you have to pay taxes on that money. So majority of people have those type of accounts. Tax deferred, tax later accounts are those that have 401ks, 403bs, IRAs, annuities, things like that. You are deferring taxes, meaning you're not paying taxes today. You're postponing taxes to pay taxes in the future when you withdraw the money. So you get a tax break today, but you pay taxes later in the future. Only issue is, or problem it could be is, do you think taxes are going to go up in the future or is it going to go down? You have to consider that. And also tax advantage, tax-free accounts. These are things like cash value life insurance, health savings accounts, 529 college plans for your children. It could be municipal bonds as well. So basically with these accounts, you take care of the low interest rates, low tax rates today. You put in post-tax dollars, the money grows tax deferred, and you can access that money in the future tax-free. So you need to, I want to ask you, are you paying too much in taxes? Some people don't even know. Some people don't even know if they're paying too much taxes. They so used to it. And as a W-2 employee, I'm going to tell you, as a W-2 employee, you get taxed the most. You get taxed the most. I tell people you have to find a way to own a business or get some type of side hustle that can kind of balance out your taxes. Because W-2 jobs, you pay the most taxes. So I want you all to think about a longevity planning. You know, people, as I mentioned, people are living longer. Same thing with homes. Most people that do not set up a will or a trust, guess what happens? It goes through the government. The government make the decisions on what goes through with your assets, with your property. So we have to plan, have a longevity plan for education, retirement, healthcare, career changes, family planning. You have to set up a plan. Even when you buy a home, you have to plan. You have to map out if you can afford this monthly payment. You have to be able to realize if you're able to afford if an emergency happens. So we teach you all how to move from being financially insecure to being financially secure, and eventually, hopefully, we could all reach financial independence. Who I want to be financially free? Pretty sure. All of us on here, you know? So be a part of the financial campaign. We want you. You have access over 300 financial centers all throughout the U.S. and Canada that you can join these campaign. As I mentioned, we bring the education to you, and this is also what I want you to be a part of. And I'm gonna leave it right here because I know I'll get you all off soon, but I want you to be a part of the financial education platform. This is free to you all. Financial workshops that are available to you. If you want to enter in these workshops for free, let me know. We talk about building savings and building wealth. We talk about increasing your cash flow and managing your debt, preparing with proper protection, your health and your wealth, understanding assets, accumulation strategies, investments, fulfilling long-term goals. And for those of you that think about retirement, we also educate you on Social Security, how you can maximize your benefits with Social Security. So if you want to enter into these workshops, let me know. They are free, no charge to you. Virtual workshops for you, just let me know. I definitely believe y'all can benefit from this. But I'm gonna end it right here for you all because I did tell you this is the time I'll get off. But I want to thank you all for joining it. I want to thank you all, Faith. I want to thank you so much for giving us the opportunity to get this wonderful information. Anyone have any questions? I missed any questions for Faith? Anything at all? If not, we can end it right here so I can stay true to my word. Any questions? Okay. Khalil, I'll send you the information to the workshop so you can join the workshops as well. Anyone else? I'll send an email to everyone as well with information for the workshops if you want to join in. Let me know if you want to join in so I could possibly give you a workbook and also a Saving Your Future book for, the basic principles on finance. Name of the book, Saving Your Future. Yeah, Saving Your Future. And I'll have that, make sure I get that to everyone. But let me check the. Okay, I'll make sure I give everyone they definitely the books. All right. Well, thank you all for joining in. This is going to end our session. Thank you once again, Faith, and thank you all for joining in. Enjoy the rest of y'all evening, y'all night, and be tuned. Be ready for another episode with me and Faith again. Thank you all. Have a good night.